So the Federal Reserve will be cutting interest rates this week, but what impact will that have on the markets? In this video, we're going to be taking a look at the historical data and looking at the possible scenarios that could play out in this coming week. So let's get into it. First off then, let's take a look at what size of a rate cut we may be looking at on Wednesday. So as you can see in the top right corner, there's a 100% chance, or an estimated 100% chance of an ease, i.e. a rate cut. And then you can see here the chances of whether it's going to be a 25 basis point cut at 41% and a 59% chance of a 50 basis point cut. And you can actually see that the pendulum has swung massively in the past month or so. So back on the 16th of August, it was a 75% chance of a 25 basis point cut and only a 25% chance of a 50 basis point. Then it was down to 70-30 1 week ago. And then yesterday it was about a 50-50 chance. And now you can see that the pendulum has swung the other side. And we're now looking at a more likely 50% basis point cut as opposed to a 25 basis point cut, which is very surprising to me personally, because normally the Federal Reserve doesn't like to shock the markets too much. It likes to give a lot of warning before something like this happens, and we've not actually heard any sort of rumors or leakings of what a 50 basis point cut might be coming. So I am surprised, or I will be surprised rather, if a 50 basis point cut does come in, and I think that is actually going to spook the markets. I think it'll be too much too soon, and we may well see a big drop in the markets, maybe a quick rally on the announcement, and then in the following few hours and days a big retracement in risk assets. But that's just my personal opinion. There are hundreds of different opinions and outlooks on what's going to happen over the next couple of weeks. It's pretty interesting, everyone putting out their view, but of course it is just a guess. It's a pure speculation because no one really knows what's going to happen. All we can do is use the data from previous rate cuts and use that to look forward, which is obviously what we're going to be doing in this video. But as I say, a 50 basis point rate cut I think will be damaging to the market short term, but we'll just have to see if we do get that 50 basis point cut and then the impact that will have. Speaking of impact of rate cuts, so I went over this in a previous video. So this is a tweet from a guy called Brett_ETH. Really good follow on Twitter, does a lot of macro stuff, knows his stuff. So he's laid it out really nicely. You can see all these different colored lines are previous rate cuts, and you can see they all pretty much follow the same pattern. So I think there's 5 different rate cuts here. So there's 1981, 1990, 2000 and 2007. So there's 4 different rate cuts, and you can see the impact has been pretty much the same throughout. So you have a quick rally off the announcement and then a huge decline over the coming months. So you can see that the biggest rally, this is obviously on the S&P, was a 7% rally followed by a 50% decline, which was the biggest decline. So not a good outlook when you take a look at that. And then the other worrying aspect is going back to the S&P again. So this was the rate cuts of 2007. And you can see it looks eerily similar to the current circumstances that we're in at the moment. So you can see price action very similar back in September 2007 leading into the cuts. And you can see what we had was a quick rally off of the announcement of the rate cuts and then a huge decline. And so are we looking at something similar happening this time around as well? There's a lot of other things that are similar. So the unemployment rate, the inflation rate, the housing stats, economic activity, etc. So there's a lot of things that are rhyming with what happened back in 2007 as we go into these rate cuts. Moving on to how it might affect BTC. So there's only been one rate cut cycle that Bitcoin has been or has existed within, and this was back in the COVID cuts. So this was obviously back in 2019, 2020. And you can see again, similar to what we just looked at with the S&P, the price structure or price action is very similar to what occurred last time. So this was obviously back when Bitcoin was sub 10k or sort of in and around between 12 and 6k. You can see that the price action quite similar to what we've had in previous weeks. So we've had this huge leg up that we saw, that must have been around May 2019, similar to what we've had this year in sort of March, April of 2024, and then into this sort of sideway or this range bound choppy price action that we're currently seeing and saw back in 2019, 2020. And you can see going into these rate cuts that Bitcoin actually declined on pretty much every single rate cut, resulting in a total pullback of 54%. Now, of course, you might want to discount those final two rate cuts. That was obviously due to a black swan of COVID. But if we take a look at these first three rate cuts, you can see there's a 40% decline from the announcement of the cut in going into the third one. So are we going to see something similar with Bitcoin, or are we going to see Bitcoin put its gold hat on like it did with the bank failures of last year of 2023 and become and act more like gold? And if we take a look at this article on Investopedia, good article on the Fed funds rate and that impact on the gold price. And if you scroll down, you can see this short little paragraph here. What determines gold prices? So obviously we know it's built on supply and demand, but this sentence here: economic or political turmoil can send investors flocking to the perceived safety of gold. So normally when there's stuff going down and there's uncertainty in the market, often that money flocks to gold as a flight to safety. And it kind of makes sense when you think about interest rates. So whilst interest rates are high, money is going to seek out that high interest rate yield, whereas when interest rates come down again, then money tends to flow into more safer options, and obviously gold is one of those. So can Bitcoin put its gold hat back on and act like it did back in 2023 when we had those bank collapses and Bitcoin rallied? So it's obviously a lot more of a mature asset than it has been since its inception in 2009. It's now got the opportunity, it's got the liquidity, got the awareness. Has it now got the trust to be that flight of safety? We'll have to wait and find out. But let's go and take a look at the charts and see what possible outcomes there could be on a volatile week such as this. Starting then on the Bitcoin weekly chart, and we've had an interesting couple of weeks. So we obviously dumped down to around 53k 2 weeks ago. Last week, a big rally, popped all the way back up and retested 60k. However, this is obviously a big area of resistance. So not only is 60k obviously a big psychological level for Bitcoin, it's this big level of previous support and resistance that we've talked about time and time again. But not only that, it's where the weekly moving average 21 meets as well. So you can see we've had that small rejection off it over the weekend, and currently Monday today, obviously we are having a bit of a pullback. Not only that, but it was also the 618 retracement area or fib retracement from the swing high of Monday the 19th of August down to the lows of 2 weeks ago. So kind of like that perfect area for another lower high to potentially continue this pattern of lower highs and lower lows. We take a look at the daily time frame as well. Currently sat on an important level here, right on the moving average 21. So lose that, then we've got this level of 57.4k. Lose that, and we may well be going down to retest 52k. That being said, if we can manage to rally, if we rally off of the Fed rate cuts announcement on Wednesday and we get a strong weekly candle close above 60k, then I think we are well on our way back to all-time highs, because the lows we put in here at the on Monday the 5th of August, they should be kept intact. Potential higher low that we've formed here, and as I say, if we can get back above 60k, take out these highs at 64, then we should be well on our way. But the weekly candle close will be important. There's bound to be volatility on Wednesday. We may well be above 60k on Wednesday and then drop back below it by the end of the week. So as I say, the weekly candle close will be very important. So don't get too carried away with how Wednesday goes. Wait for the end of the week. If we move on to Ethereum, see what's going on there. Not too much in terms of the weekly time frame. As you can see, pretty much doing nothing over the past 2 weeks. We've already retraced all of last week's rally. In terms of the daily time frame, we've rejected the moving average 21 back on Friday and Saturday, and now we're just in the middle of this range between 2422 and 2177. This 2177 level, the last level of support before we retest those monthly range highs back at 2k, which I personally think will be a pretty good area for a long, really good risk reward. If we take a look at the total pullback from the top down to there, that's a 50% retracement from the highs. I think that's a really good R&R, and as I say, your invalidation would basically be a monthly close back inside this monthly range, which I think is unlikely, but of course we don't know what impact we're going to have with the Fed rate cut. So we'll have to wait and see. But personally, I think 2K would be a good entry on ETH for a long. So in terms of the monthly and the weekly, and daily, in fact, not really too much to talk about. We just have to wait and see what happens with price action over the next couple of days. As I say, the two levels to watch out for on the daily time frame is this 2422 level where the moving average 21 is, which we rejected a few days ago, and 2177. If we take a look at ETH BTC, still struggling. If we take a look at the monthly time frame, we're sat on this monthly level of 0. Or just below 0.04. Lose that, and we're probably heading for around 0.037. And then potentially even lower to 0.03. So we've been in a decline on ETH BTC for a full 2 years now. You can see September 2022 was the last time we were basically up on ETH BTC, and it's just been a slow decline since then. So not looking too good, not looking better on the weekly or the daily either. Horrible week on the weekly last week, and as I say, on the daily, we've not closed above the moving average 21 on ETH BTC since back in July 2024, which of course means we go to Bitcoin dominance. That is of course rising, looking to break this big monthly resistance here at 57%, which means we may well be looking at a jump all the way up to 64%. So as I've talked about in previous videos, the time you want to get excited about a potential alt season is if we see this reject or hold as resistance, or if we see it deviate. So come up above sort of 58, 59%, then get monthly close back below 57%. That's the time to get excited. And then if we see ETH BTC actually start having a bit of a bounce and a bit of upside. Finally, as well, you want to see a bullish total too. Talked about this before, put the warning out a few weeks ago about alts when we were rejecting the moving average 21 and that weekly level of 940 billion. And as you can see, we're just not doing anything too much at the moment. If we can reclaim the moving average 21, reclaim this level of 940 billion, then I think that looks pretty good for altcoins. Let's take a quick look at the S&P as we go into this, as I say, this important week of Fed rate cuts. You can see we are hovering just around all-time highs. So as we looked at previously, normally what you see on Fed rate cuts is a quick rally after the announcement and then a dump. So are we going to see that? Are we going to see that push into new all-time highs, get everyone euphoric and thinking that it's up only again, only to then pull back and deviate the all-time highs and then go on a big correction? We'll have to wait and see. So let us know in the comments below what you think is going to happen in 2 days' time with the Fed rate cuts. Do you think we are in for a big recession and a big pullback on risk-off assets, or risk-on assets, I should say? Do you think Bitcoin is going to act like gold and be a flight to safety, or do you think it's going to be a bloodbath? Like the video if you enjoyed the content. Don't forget to subscribe, and I'll see you on the next video.